I'm going to apologize now if I say touch brackets. It's kind of a bad habit, but I'll do my best to say knockouts. And I just want to say my section here today is, and again, this is kind of my disclaimer for it, right? It's not going to be the end all be all everything. It's impossible to teach you guys everything you need to know about technical analysis. But what I'm hoping today is that what you've learned about binaries, what you've learned about knockouts thus far, combined with what I would say is my simplistic approach to kind of reading charts, you'll be able to go into that last section with Todd and just be able to blow it out of the park and really understand what he's diving into. And again, my challenge for everybody that's on this webinar is I want you guys to ask Todd a lot of questions. Where is this indicator? How would I put it on? What matches up to it? I want you guys to make him sweat. It's the end of the day, but again, this is what we prepared for, so I know he's ready for it. So with that said, I'm going to jump into my presentation. This is really an introduction to technical analysis and really a how-to guide of reading charts, okay? First things first, I know the guys have probably mentioned this already, but I want to go through the Nadex risk disclaimer. The trading on Nadex involves risk and may not be appropriate for all investors. The trading can be volatile, and investors risk losing their the risk of losing their cost at the end of the transaction, including fees. The information presented within this presentation is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. I won't really be diving into any live charts today, so again, it's not necessarily doesn't necessarily pertain to us, but again, it's just a standard disclaimer for us. Now, past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. That's very important, that last line. Although I'm not diving into charts, I'm going to talk about technical analysis as it pertains to both Forex, stock index futures, and commodity futures. And there's kind of a little hidden gem there that you guys will get at the very end. Now, Nadex is a registered trademark of the IG group, all right? Now, here is what I'm going to cover today. It seems like a long list, and some of the things are kind of combined together. But these are the main points that I want us to cover today. Really, what is technical analysis? What do I mean by that? And how does that differ from fundamental analysis? Everybody is very familiar with fundamental analysis, and so many people in, I would say, the United States are very stock market based. And again, that's where kind of the fundamentals comes in and really what the difference is and why I believe in technical analysis. Then we're going to talk about different types of charts. I always get asked, what are the best kinds? There's many different types of charts out there. Why do I choose the ones and why do I prefer the ones that I do? And I'm going to really break down a candlestick. So a lot of people understand the very kind of extreme basics of what a candlestick is, but are you using it correctly is really what I want to kind of dive into a bit more, okay? I am what I would consider a price action trader, okay? So what I do is I read buyers and sellers and I read it inside of the charts. The only way that I have the ability to do that is inside of a candle, okay? So hopefully I can give you guys a little bit kind of a better view inside what professionals are actually looking at beyond just colors and formations, okay? So then what we're gonna do is we're gonna talk about trends, okay? Trend is something that everybody talks about, and at the most basic form, if you are new to trading or experienced to trading, you will understand that trends are extremely important. And again, it's really almost the most fundamental, basic kind of technical analysis kind of like book you should have in your quiver, arrow in your quiver, right? You should understand what trends are and how to read them in a chart. And again, it kind of uses the lesson of how do you form a candle, and again, how do you apply it to a chart? Again, I want you to be able to take the actual concept and bring it across into a chart today. All right. Then we're going to talk about time frames. Now, I'm all over time frames. My caveat to this one is, depending on your experience level and comfort with a chart, you may say, I know what a time frame is. I got it. It's basic. But are you using multiple time frame analysis, and are you using it correctly? Okay. There are right ways to do things, and there are wrong ways. And a lot of times when you hear this MTF or multiple time frame analysis is when people throw that terminology out there. What are they actually trying to do with it? And I'm hopefully going to be able to solve that for you today. Then I'm going to dive into what is an indicator, what are the mistakes that people make using indicators, and then I'll tell you what the absolute best hands down indicator is in the market, okay? Now, I'm going to close today's session out with really the biggest secret about charts that people never tell you. It's one of those things, a lot of people, it's a big smack in the face for a lot of people. I've kind of given you guys a little bit of a hint to it so far, but it's honestly, it's the biggest secret that no one will ever tell you about technical analysis, okay? And at the end, hopefully you guys also agree and, you continue to go with that. All right, so first things first, guys, I'm gonna start off with a quote, okay? Technical analysis is a skill that improves with experience and study. Okay, always be a student and keep learning. Okay, now this is not written by me. This is written by John Murphy, author and chief technical analyst over at stockcharts.com. God knows how much he paid originally to get that URL, but he got it, right? But again, it couldn't ring truer. Okay, it is absolutely impossible for me to teach you guys everything you need to know in technical analysis in the next 45 minutes, right? Or 40 minutes at this point. But again, be a student. Always try to learn something new. Take something away from every presentation, a golden nugget. Write it down, take notes, research it on your own, and keep going with it. That's how technical analysis has been, particularly for me. And I started back in 2000, and I still will watch videos and get different books and always try to make myself a better technical reader. And that's what you guys are going to have to do as well. So again, keep this in mind, okay? All right, so what is technical analysis? Now, obviously, there are two big main pieces of kind of trading, right, and analysis. There's the technical side, which is basically just reading charts, okay? Technical analysis is a trading discipline employed to evaluate investments and identify opportunities in price trends and patterns seen on a chart. Now, first things first, what is a chart? Very simply, a chart is nothing more than a graphical representation of buying and selling, okay? What it's doing is it's taking a data set, and again, we'll get into time frames, I'll cover this more, but it's basically taking a specific set of time, and it's recording all the transactions inside of that time frame and putting it into something that we can visually see, okay? Now, you can do it by time, by volume, and there's a number of different ways that you can do it, but it's basically taking a subset of data and putting it into something visual so human beings can see it, okay? I'll tell you right now, algorithms, computers, they're not reading charts, right? They can do it with the actual data themselves, but human beings, we have eyeballs, we need to see it, so it's a graphical representation. Now, technical analysts believe that past trading activity and price changes of a security can be a valuable indicator of a security's future price movement. Now, what technical analysis is not, is it's not a crystal ball, okay? It does not foretell the future, okay? People think that if you are a great technical analysis, you are going to know what's going to happen in the next 5 minutes or 10 minutes or hour. That's not what it's about, okay? The right way to think about technical analysis is what could happen when price reaches a certain level, okay? The most fundamental way to look at this is think about it. If there's something that you really, really like from the grocery store, right? I don't know, say it's grapes, right? Once a year or twice a year or maybe once a quarter, grapes go on sale and it's like crazy, right? It's like 99 cents a pound. It's the ones you absolutely love. You get them every single time, right? It's kind of the same idea. At normal prices, you're not interested. At sale prices, you want it. Technical analysts, right? When we're looking at charts, what we're doing is we're looking for kind of if this, then that. When price comes to here, I like it. When this happens, I like this. When this happens, it comes here. It is not a crystal ball. It's not fortune telling. What it is it's using statistics and analysis to determine what we would like to do when price reaches specific areas. Now, on the other side of the coin, okay, it may be contrasted with fundamental analysis, which fundamental analysis, you think Warren Buffett, he's a fundamental analyst, right? He's probably the most well-known. He focuses on the financials of a company, what's happening, the inner workings, the earnings. I mean, there's about 90 million different things we could talk about here, but like earnings and liabilities and things. So they're actually talking about what's inside. You know, I mean, if a company is huge in debt, yeah, that's kind of a crystal ball for what's going to happen in the future. A little bit different. That's not really even a crystal ball. It's just how long till it actually happens. So it is a little bit different. And in history, things have changed. It used to be before all the technology we had, the only way for you to look at charts was to literally get a newspaper and self-plot all this information yourself, right? So a lot of the books and a lot of the indicators and things like that I'll mention later today, they were actually created back in like the 70s and 80s, but it's not like you and I had access to computers where this data was published and brokers had this type of information. It was only the guys on the floor that had access to this stuff. So the playing field has kind of been leveled, and it used to be that it was very, very much more fundamental analysis based. These days, because of the speed of information and technology, technical analysis has become really, I'd say, the creme de la creme of trading and investing. Okay, and it's for both. It's for income as well as wealth focus. Okay, so don't think this is just a day trader's kind of tricks or habits or anything like that. This is something that everybody uses now. Okay, if you guys listen to radio programs and things, you will hear them say throw all different types of comments out. They're all coming from the technical analysis side. Even when it's something like talking about the earnings of a company or forward earnings, which are fundamental analysis, What do they follow up with? Yeah, we're approaching a 200, moving average, right? 200 period moving average. And they're starting to throw technical analysis in there to justify what the earnings are. Okay, so obviously I'm a bit biased. I'm a technical analyst. I like looking at charts. I like reading charts. I'm always going to say that that's what's best. You have to make that determination yourself. But I believe to be the best possible trader you need to do, to be, technical analysis has to be something that you focus on. Okay, now there are many different types of charts that exist. Okay, as I said, a chart is nothing but a graphical representation of what is happening during that specific period. It could be a time-based period, it could be a volume-based period, but these are the three most common. Now there are advanced versions of these. If you guys have ever heard, Heikineshi candles, they are a form of Japanese candlesticks in that kind of formation, but they're kind of adding trend into it as well. It gets more complicated and they get fun to look at, but these are the three most popular, right? Japanese candlesticks, interestingly enough, they came from the Japanese rice markets, and they basically are showing high, lows, open, and close data, okay? And it's used in different colors, and the colors don't really mean anything besides we just assume that red is down and green is up. You can change these on almost every single platform. Sometimes you will only see red and you will see hollow candles. If you are red-green colorblind, obviously my color choices aren't going to work for you. You can change it. I've seen blue instead of gray. I'm sorry, blue instead of the green. It could be whatever color you want. If you love really, really fancy, you could use yellow and fuchsia. You can get as crazy as you want with it. It doesn't mean anything, but what it is doing is it's showing you the high, low, open, and close, and I'll show you that in a second. Now, bar charts are a little bit different, and they look almost like a Japanese candlestick. Almost. But it gives all the same exact information, the high, low, open, and close. It's just not as visually pleasing to the eye. The bodies of the Japanese candlesticks, and again, that's why the Japanese candlesticks are typically the most popular, but it's, bar charts say the exact same thing. Now, a line chart is a little bit different. It's smoother. You don't have all the dashes and the lines and the bodies and all that kinds of stuff. All it does, though, is it's taking the closing price of a security. And again, it's something that you could use for maybe more longer term trading. But really, when you're trying to read what's happening in the market, it's really not your best choice. In all honesty, almost every platform has it on there. I'm not 100% sure why anymore, because not many people use it. It is very limited in its functionality, but it's there. So if you pull it up in your chart and all of a sudden, you're like, hey, look, this is great. I just found this line chart tool. Just understand it is very, very limited. Okay. So let me dive into why Japanese candlesticks are the most popular. And again, this may be basic for some of you, but again, it could be a refresher. Take it for what it's worth, because it's going to really depend later on. Again, this is price reading. This is, again, we got to start someplace. So a Japanese candlestick has two components, and that's it. Okay, there's the square box in the middle, okay, and then there's wicks, right? They are called candlesticks, hence they are named wicks. Sometimes they're called tails, shadows. There's a bunch of different things that people will call them, but for the most part, body and wick is what we're talking about. All right, that's it. If you've mastered body and wick, you understand you are now a master of Japanese candlesticks. Now, going up one more level, wait a second, now you just turned to green. I went from master to apprentice all over again. Basically, all this does is, remember I said it did high, low, open, and close? The color of the candlestick is nothing more than where the closing price was in relation to the open. Now, why is this important? This is extremely simple. You know this, right? There's a hidden message inside of this candle, okay? This is what would be called an extended range or a large-bodied candle, okay? What if this was very, very small? What if it was just like a quarter of that? Does that tell you something about price action? Absolutely. Okay. Some people see this as green, but here I'm going to throw a little kind of a wrench in here, right? What happens if this candle was half the size or a third of the size, but still green? If it's green, does that mean it's a bullish candle or a bearish candle? And this is what throws people off all the time. Okay. They see Japanese candlestick, they see green, and the first thing that they think is, this is a bullish candle because it's green. Well, what if it closes in the bottom, say 20 or 30%? And there is a body, right? There is a body, but if you took wick to wick, top to bottom, but it closes in the bottom 30%, even though it's still green, is that a bullish candle? The answer is no. And that's where a lot of people get lost in Japanese candlesticks. Now, on the right-hand side, again, this is obviously the breakdown of a Japanese candlestick, but you can see the same exact data, and you guys can see why bar charts, the OHLC, actually exist. They both show the same thing. The open is at the bottom, price moves up and it went as low as the bottom of the wick, went as high as the top of the wick, but it closed at the same exact spot. And you see the difference between the two? So it's exactly the same data. And actually, I do know people that prefer the bar versus the Japanese candlestick, but it shows the same exact data. And some people actually prefer the bar because they don't get that bias, right? Now, same question here. Again, all I'm doing is moving the opens, the closes, and changing the colors around. This is also a big-bodied candle. Okay, what does the big-bodied candle tell me? It tells me that this had a lot of conviction within that time period, okay, or volume period, whatever it's doing. And again, could you have a red-bodied Japanese candle and have it still be bullish? The answer is yes. So see, it's not just about reading color, it's about reading the open, close, high, and low, and determining where price had moved during that time period. Now, another thing that's interesting, and this goes back to why I added that quote, is this, okay? Besides the color, besides the movement, could two of these next to each other show me something more? Yeah. Could three of them? Sure. There's many different kind of patterns and things like that exist. But at the end of the day, understanding how price moved, and again, if I went from one time frame to another time frame, what does that do? It combines them together. You could also do the same exact thing. You could actually pull them apart in your mind as well. And that quote that I have on there about practice, 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 when I was trading years ago, right, I focused a lot on the lower time frames because that suited kind of my risk personality and my trading personality. It was a bit more aggressive. I would look at a lot of 5-minute charts, okay? But as I've gotten more and more experience and I've looked at this, now I could look at a 15-minute or a 30-minute Japanese candlestick and see where the high was, where the low was, and almost without a doubt, be able to tell you what the 5-minute candles look like in that time period, okay? So as you get more experience reading the candles, looking at where the open is, the high, the low, the close, where the body is, how large it is, you're actually able to take data from smaller time frames, understand how it was constructed inside of a Japanese candlestick, and then use it on a larger time frame. And what are you doing? You're getting more data than what the average person can actually look at. Okay, that's where Japanese candlesticks get very, very cool. And again, you can do it with the bars as well. You can't do it with the lines. Someone mentioned, could you add Renko? You could, sure. I mean, there are so many different styles that people have added in there, right? But it doesn't make any difference. Again, understand what the tool is you're using. Japanese candlestick is the most important, as I said. I could go into, there's 10 different ways that we could, there's graphical representations. And again, we could actually have the discussion whether price during a certain time period, as in minutes, is better, or a volume based. A lot of people in the futures market like volume based charts. I am more currency based, so I like time based because there's no true record of volume. Okay, so that's candlesticks. Now, a couple things to keep in mind. All right, candlesticks or bar charts, there's no way to make a kind of a defined argument to say which one is actually better. Now, Todd later today will most likely, I'm pretty sure, he'll be using Japanese candlesticks. Okay. And you can always ask him his opinion. Why are you choosing that one? The Nadex platform has other options. Why are you using that one, Todd? Why do you like that? What's your personal preference on it? It's really up to the individual technician, okay? I find that, I got into Japanese candlesticks first. I do know people that like bars. It's entirely up to you. Now, this point number 2 is extremely important, okay? Charts plot agreements between buyers and sellers. Recorded transactions, okay? A lot of brokers out there and different platforms and advanced people like these super secret data, they'll like to sell you or tell you that we have level 2 data, and that shows you all the bids and asks of everybody that wants to get into a chart. And that's what you need to become successful. Well, sure, maybe 10, 15 years ago, before everybody else out there could also see that same data, that gave you an edge inside of the market. Nowadays, you know what they do with level 2 data? They use it to trick people. Because if you guys see a whole lot of bids or asks, you're like, hey, there's some orders sitting right there. But does that mean that those orders have to stay in the market? Could somebody cancel that order before it got filled? Absolutely. Do you think the general public that doesn't know that can get manipulated by seeing large areas of bids and asks on a chart? Sure. They're called iceberg orders. Absolutely. It looks like it's a little order and it's actually a whole lot, or it's a whole lot and there's nothing there. Again, that's not what is actually happening. A chart is actual plots. It's not telling you what could happen. It's told you what has happened. When price is rallying, think about it. When oil for the first time hit $100 a barrel, right? And then came back down again, what did that tell us about oil at that time? It told us that no one was interested in buying it above that rate, and sellers were stepping in to push the price back down again. That tells me what did happen, not what could happen. Okay, seeing bid ask, again, that's where you get into manipulation, and then you get angry because what happened? The market's against me. No, the market played you because you didn't understand fully what you were actually looking at. Okay, now number 3 is a chart. Again, these recorded transactions, these are the source of all indicators. Okay, I'll say that again. The chart, the recorded prices, these are the source of all indicators. Okay, technical indicators are nothing more than mathematical calculations based on the security's price and or volume, all of which are derived from a chart. Okay, many people think it's some magical secret sauce, and all it's doing is pulling data from the chart, combining it in some sense, running it through an algorithm, comparing it, multiplying, dividing, and then spitting something out of something that could happen. But there are also problems with that. Okay, there's many problems with that, and I'll cover that when I get to the indicator section. But just realize the root of everything is inside of a chart, inside of the candles. And again, this is a very basic, again, we could spend hours discussing and going back and forth on just which candle formation is best and this and that. But understanding where the buyers stepped in, where the candle opened, where it closed, where was the range during that time frame? Is it really, really big? Is it really, really small? Understanding these things and being able to read these things, this goes directly into the 2 presentations we saw earlier today, right? They were talking about binaries. Well, knowing where I've seen buyers or sellers step into the market and seeing huge movement, gigantic extended range bodied candles off of a level, you think those, may give you some potential for some binaries or some knockouts? Absolutely. Okay. Being able to read where buyers or sellers stepped into the market or where these specific indicators are showing you there could be potential buyers and sellers. That's how you match it up. And again, that's going to be your last session today. Todd is going to take what I'm kind of showing you here and then kind of go back and show you how to match it up. So again, that's why you guys absolutely make sure you stay on for that last one today, right? So this is reading the actual candlestick part of it, but at its most basic level, and again, I want you guys to get something out of this that you can use right away. And again, be able to see in the charts that Todd's going to show you is trends. Okay, people look at charts to uncover trends. Okay, you guys have seen this. Think about the analogy, right? If you have a really little snowball and you start pushing it downhill, what happens? It picks up more and more and more and more snow as it goes down. It goes more and more and more. It gets bigger, 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 bigger. And that's how traders make money, right? You don't get into something, make a little profit, and get out, right? You got to ride these trends. Okay, you guys have all heard the saying, right? The trend is your friend, and then once you lose money one time doing it, then it's the trend is your friend until the bend at the end. You guys have all heard that. If you haven't, you need to get out a little bit more, or maybe not during the the whole crisis right now. But you guys know what I mean, right? It's definitely something that all traders have talked about. It's kind of lingo. We all know what it means, right? Now, trend trading is a strategy that assumes that once price is in motion in a certain direction, it's going to remain in that direction. Okay, it's used by short-term, intermediate, as well as long-term traders, both for wealth and income. Okay. And it does. There is absolutely amazing trades. I don't know if you guys saw the dollar CAD yesterday. It just kept going. It dropped like 172 pips. It was an absolutely huge day. And I had one of my students just say, it just keeps going. It just keeps going. Yeah, because when things get in trends like that, they just keep going for long periods of time, right? Trend trading combines many forms of technical analysis, but it's not limited to just support and resistance or moving averages or momentum indicators or sharp patterns. There's a lot of different things that go into it. And again, this is one of those things. Trend, everybody talks about staying, you're either a trend trader or a counter trend trader. So you kind of got to fall into one of the two camps, right? It's like blue versus, red here. But understand there's not one way to determine trend. Okay, there is a very, very simple form, and at its most simplest form, again, using candles, what you're talking about is higher highs and higher lows are equaling an uptrend, and lower highs and lower lows equals a downtrend. If you guys can do nothing but remember that will help you in a lot of different ways. Are we in a downtrend? One of the first things I do with my student when they're, if when my students have problems, because all people have problems trading. It's nobody's perfect at it the first time. It's a very difficult skill. I always ask them, what's the trend right now doing? Are you going counter trend or are you with the trend? And they always take a step back and they look and say, I forgot to look at that. Okay, that's one of those things you should, first off, know what your bias is. You guys see me do these presentations on Tuesday mornings where I kind of analyze the market. The first thing I'm doing is, where are we in the trend? Kind of where are we at, right? Is it trending? And the most basic way to look at that is, again, looking at where the buyers are stepping in, where the sellers are stepping in. Are the highs getting higher? Are the lows getting lower? Now, I will give you guys kind of a little bit of, and here, I'll just show you in the next bit here. this is an example of an uptrend. What do you see here? Look at the arrows above, right? You're seeing that there's one high, and then there's a higher high, and then another high, and then another high. What do you see on the bottom? Higher low, higher low, higher low, higher low. Now here's a question for you. Which one of these two sides is the most important in an uptrend? Is it the higher highs that are the more important, or is it the higher lows that are more important? Go ahead and type that in the chat, and I would love to hear what you guys have to say. I meant to actually ask them if they could add a poll, but we didn't do it. But which one do you think is more important, the higher high aspect or the higher lows? I can tell my students in chat right now. Oh, we got some smart people in here. Uh-oh. Let's see. All right, so it looks like most of you are actually on the right page. Yes, it's actually the higher lows that matter. Manny, I'll explain higher highs. Sure. Manny, so I don't know if you can see my cursor or not because I can't see what you guys are seeing, but see this green arrow? Right, look under there. You see how the arrow, the black arrow above price to the left, there's kind of a peak and then price pulled back. And then there was a large extended range kind of green body, right? And price pulled back again. And the arrows are pointing at kind of the peaks. The highs are getting higher before pullbacks. Remember, the market moves in two phases, okay? All markets move in two phases, impulse and correction. That's it, okay? It's either impulse or it's correction. So what I'm saying is the impulse move when it stops, if that is high, and then you have the correction, and then there's your low. And then the impulse, and then the correction. And then the impulse, and then the correction, right? And that's what we're tracking. Again, I'm going to tell you guys right now, you're extremely smart. Most people pick the higher lows are the most important, okay? The higher highs don't necessarily matter as much. It's the lows. You want to know where the buyers are stepping into the market. That's really what determines it. Because again, remember, prices push back down to get more orders, to get more, to buy more of something, right? So they could drive the price higher, right? So the lows is what matters the most. If you only had to look at one, the bottom is the one you want to look at. Now, again, flipping this around, here's a downtrend. All right, now Manny, same thing. Look where the red arrow is on the top. Again, that's showing us that it's a downtrend. Okay, see where if you look to the top left, you see an arrow, right? That's where we're starting. Then you have an impulse down, and then it pulls back, and then down, and it continues to push down, 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 and then pulls back, and then pulls down, and then pulls back. And you see how the pullbacks are not as high as they used to be, and every time the price is driven down, what is it doing? It's going lower. Now, are these all areas that you would want to buy or sell at? No, absolutely not. Like, this is one of the things, you guys have heard me mention that, I'm definitely a, supply and demand type person. I'm not a support and resistance person because I could draw support and resistance 10 different times on this chart, and you can see price keeps breaking below and below and below and below. And this is why understanding how to read price, there is like 2 or 3 shorts in here, but there's nowhere that I want to go long on this chart right now. Okay, and again, that's because what I'm doing is I'm looking at the candles, I'm looking at the candle formations, where the highs are, where price is closing, what was the reaction off of that candle? Is there like an extended range body coming off of it? Again, I'm diving in a little bit deeper to look, and what I'm doing is I'm combining that, saying, hey, listen, I can tell that we're in a downtrend. I'm looking for areas where I could find potential shorts. Because again, what do you want to do? Do you want to sell something when it's absolutely its cheapest, or do you want it to pull back a little bit, sell it for a little bit more money, and then have it fall in your favor, right? Maybe easier if I flip that around. Here, I'm going to go back one slide, okay? What I'm doing is I'm looking for areas to buy as it pulls back, right? And again, inside of an uptrend, you get a pullback. That's where you're looking to get long, right? That's what technical analysis is about. But think about it. Would you rather buy it when it's the most expensive it's always been, or do you want it to pull back and go on sale? You want to buy it when it pulls back and goes on sale, okay? But being able to read price, there's, let's see, there's about 2 buys in this on the upside, okay? There's no shorts in here. I couldn't tell you if there's a short on the top because I can't see the left, but I can tell you that there's 2 buys inside of this pattern right now, okay? Based off of what I'm seeing off the prices. And again, what am I looking at? I can't see prices. I have no idea what asset this is, but I can look at the candle and say, hey, listen, there's a, and actually here's a great example. If you guys can look, and again, I don't have the cursor on this one, but look at the 3rd up arrow in the middle. Do you guys see that there's a large green body, almost no wick on the bottom, a little tiny wick on the right? Then you see a red candle, and it's mostly wick with just a little tiny bit of a red candle, right? Or red body. And then the next candle is a very large green one, right? It starts right around the 3rd up arrow, right above it. There's a red candle, Is that red candle bullish or bearish? Most people look at that and say it's red, it's bearish. No, actually, that's a bullish candle. It closed in the top 33% of that, that's entire range. And that's where people kind of mess this up, right? So a lot of people say, oh, this basic, I got this, but they're like, wait, it's red, it's bearish. No, it went down. It's a red, it's a bad candle. No, it's not a bad candle. It's the corrective phase. That's the candle you love. That's the candle you're looking to get in on. That's the one you want to buy on. That's the sale price, right? Yeah. So again, Anthony just said, oh, it's a hammer. Yeah, Anthony, they have all different kinds of names for this. And again, that's where people get confused. What is it? Is it that? Is it this? At its simplest form, I can see that thing, it tried to push down. And what did buyers do? They forced that thing all the way back up again. And it did close right below, where it opened. But look at the buying pressure in that thing. And again, what did price do? Continue to push higher. So I'm not going into patterns. I'm just reading what happened. But again, that's how you guys are using uptrend and downtrend, right? Now, this is that's the basic. Again, this is kind of like basic. And now this is where you're even taking trend to kind of a new step higher, something even bigger, right? What is a time frame? Okay. I use time frame based charts. Okay. The reason I do that one is because, again, I'm predominantly a currencies trader. I love currencies. It's 24 hours a day. We could talk about, for weeks about why it's, in my opinion, it's the best market. Okay. I like to use time. You could use volume, this number of transactions, and then it prints. Those are called share bars, and it gets a little bit more confusing. But multiple time frame analysis. Okay, this is probably the most, I'd say, forgotten method of reading trend inside of chart analysis. And what does it do? Okay, first things first. How do we do it with Nadex? Now, Todd and Dan will both be extremely happy with me on this one, and here's why. Bam! Look at that. Nadex charts. I'm showing you this, guys, because, again, inside of Nadex, you absolutely, without a doubt, have the ability to use multiple time frame analysis. When you guys click on the chart, you guys see it down here? It says 1 day, 4 hours, 3 hours, 2 hours, 1 hour, 30 minute, 5 minute. Why would you need all those things? It even goes down to 1 second tick charts, right? Why would you need all these things? Well, think about how much data. If this was, say, a 1 minute chart, I only have so much screen real estate, right? I can only see kind of one picture. But at an hourly phase, then I can see even more. And what I'm trying to show you is this. Look, here is the exact same asset. It doesn't matter what it is. This just happens to be, I think it's the euro dollar, right? The chart on the left is the 5 minute. Man, it's all over the place. It's back and forth. There's large candles. It's wicky. Okay, I can kind of tell something from it. What's the trend? I don't know about that one. I mean, it's kind of going back and forth, but it looks like it's in an uptrend, right? We have a little bit of higher highs, but it was just coming down. So I don't know. Then look at the 4 hour chart, okay? All the data that's in the 5 minute chart is sitting inside of that 4 hour chart, right? Then go one step higher, look at your daily chart. All that 4 hour data, and again, you can actually see it. It's kind of on the right-hand side, right? The pivot, see the low point in the 4 hour chart? Well, that's that you see that little bump over there on the daily? That's the same exact thing. And this is one of those skills that people don't use as much. We all want the quick and what's easy. Well, I asked you what the trend was on the 5 minute, and you can give me maybe a minor trend, right? The 4 hour, it's kind of like, I don't know. This could be, I don't know. It looks like it, it could be maybe a downtrend, maybe. But I mean, we're just rallying up, so maybe this is just a corrective move, right? But then look at the daily, and you can say, yeah, what do we have over in the daily? We've kind of gotten, over the last probably 2-3 weeks, our retracement positions have really kind of gone and not gone as high and been pushed down, and we've broken, levels of supply, or if you guys want to call them support, they're a bit different, but you guys understand what, kind of what support is. I'm seeing lower lows, and what we are now, we are inside of an impulse move, or inside of the corrective move, okay? It looks like it could potentially be setting up for another push down, but it needs to find some buyers, and again, that's being able to read candles, okay? As you get better, you don't need 5s, you can use 15s and 30s, and again, 4 hours, you can go right across the daily. But it does tell you a lot about where a price is, okay? I can tell you right now, one of the biggest things about this that people get lost on is they get fixated towards one time frame. Bounce back and forth, look at them. Because you could be overall in a daily short trend, but find absolutely amazing long positions, okay? Now, here's a great example too. If you look at the 5 minute chart, one of the things, actually, let's start with the 4 hour. One of the things I'm noticing on the 4 hour chart here in the middle is price kind of came down, and the last time when price was pushing down about 3 candles back, or 12-16 hours back, you can see that there was a price of stabilization and a large extended range bodied candle, right? Look to the left, right? Right above where the R is, you can see that level where we had a big push up in price, a basing level, and then a pop up. Those are absolutely amazing spots. What did price do? It dropped down to that level, and then bam, price popped off of it. So we are overall in a downtrend, but on the 5-minute, what happened is I can see that price pulled down. In a downtrend, I'm expecting price to pull back, because remember, the impulse was down, the correction move would be up. What? Up. Well, I can play a long position. Look at the 5-minute, look what it did over there. It fell right into that kind of same trench and then popped straight back up in the air. So understanding what's happening on multiple time frames, it's kind of like having a bird's eye view of a battlefield, seeing what's happening. And this is why it's so important, okay? And again, combine your candle reading with what you're seeing on multiple time frames. And again, you should never just look at one chart, all right? Now, indicators. There's always a question I get, Brian, what is the best indicator, all right? This is just this list over here. I took this out. If you guys are familiar with IG, it's a sister group to Nadex. I was using the IG charting platform at the time, and this is all the indicators they have. Is this it? No, there's tons more, right? Tons more, but there's 5 different type of indicators that you need to understand, right? There's trend indicators that tell us where the trend is. And again, if you're not reading it, there are ones that will tell you what the trend is, okay? There are momentum-based ones, okay? There are volume-based indicators, okay? There's relative strength of trend, and then there's also what's called mean revision, okay? There are actually some mean revision ones that I do actually like. I don't use them as trading signals, but I like looking at them because I'm a big believer in statistics. I believe you should never stack the odds against you, okay? But there's many things. There's the Ichimoto cloud, which is super cool. When you look at it, you're like, man, this is awesome, right? There's Fibonacci retracements. I'm sure you guys have heard of the mystical Fibonacci, right? MACD is probably one of the most popular indicators out there. And really, in the next slide, I'm going to talk about things to remember, but MACD is one of those ones that for 6 years, I spent traveling around, going from city to city and doing seminars on trading. And whenever anybody, and again, I'm not a very big indicator-based trader. I am more of a price reader. So I don't rely, for the most part, I don't really rely on a lot of these things myself, but they all do have practices. But before you use them, okay, you need to understand what they are, okay? An example is MACD. If I ask you what MACD is, about half of you will say moving averages, convergence, divergence. I'm going to ask you what the mathematical formula is to create the lines and what it takes and what are the components of MACD, and almost no one will be able to answer it. Okay, in 6 years, I had rooms anywhere from 5 to 10 up to, I think my highest was 256. Not one person was able to give me the mathematical equations of how to figure out MACD. So people are using a tool without having any idea how to use it. And again, if you're going to put blind faith into a tool, are you 100% positive you're using the tool correctly? And that's where indicators kind of cause problems, okay? But if you know how to use it, like a moving average is something very simple, understand what it does, what its limitations are, EMAs, SMAs, there's a lot of stuff you guys can do. There's Kelter channels, pivot points, rate of change, RSI, and there's all these things. There's so many different things you can do. But at the end of the day, remember what I said. What are all of these things using to create a line or an arrow or a dot? They're using the price. They're using the same exact inputs that were inside of those basic, simple candles that everybody knows how to read, right? And that's why it's so important. If you understand the basics, think about Vince Lombardi. What did he say? Every year, every time they won the football, every season they started, what did he do? He held up a football and said, "Gentlemen, this is a football." Technical analysis is the same way. Go back to understanding price, and all of these other things become less of a distraction. Okay. Now, things to remember. Okay, indicators are lagging. Why are they lagging? Well, they're lagging because they take calculations, they need data points, they need signal, but all those things need to be generated before they can get them, right? Again, they're all lagging. Okay, they're not going to be immediate. They don't tell the future. They don't know what price is going to be before it exists. And a lot of people forget that all indicators are lagging. You need to make sure that you have the correct understanding. Most people don't actually understand what the indicator is trying to show. I see so many people saying, "Oh, well, this is an oversold territory. I should sell it right now." No, it's just telling you that there's a mega bias right now towards the selling side. It can stay oversold or overbought for a very long time. It's not a trigger. It's just telling you what kind of the bias is right now, and people use it wrong. Confusion. Okay, a lot of times by adding an indicator, it doesn't actually give you a clear picture, so people add another one, and then they add another one, and next thing you know, you have 10 indicators on the chart. They're all conflicting. You have absolutely no idea what you're trying to show yourself. Get them off your charts, right? Maybe use one, maybe use two, maybe use them as a confirmation to what you're already reading. But again, people think technical analysis is about having 150 different indicators on there. Find one, find two that you like. Have it back up your strategy, okay? And number four, most important, don't have a long or short bias. Too many people fall into the habit to finding an indicator to justify what they already believe is the case. I'm looking at this chart. I think this is a downtrend. I'm going to put Bollinger Bands on. Oh no, that's not telling me it's a downtrend. Okay, I'm going to put RSI up. Okay, RSI is good. Let me get a second one for confirmation. Okay, MACD is telling me no. That's not good. All right, let me put something else on there. And there's many other ones you could put on. But you guys see what I'm saying? A lot of times people will find the indicator to try to justify what their personal gut bias is, and that's a huge problem in trading, particularly, and that's a huge downfall of people that are going to use technical analysis as their primary analysis tool. Is you guys will have a predetermined bias, and what you will do is you will find something to back up what you believe. And again, there's a psychological term for it. I'm not a psychologist, so I'm not gonna go there. All right. So just keep those in mind. Now, here's probably one of the biggest questions I get. What is the best indicator that exists? Go ahead and type it in chat, guys. Which one of the ones that I've mentioned, and you guys are very, very smart in this group. You guys did excellent on the trend. What do you guys think is if I had to pick one, right? I have to pick one indicator. What do you think is the most important indicator that exists? Now, remember, this is in my opinion, okay? I could potentially be biased, but what do you think is the most important one, or from your experience, your success, what is the absolute best, hands down, no debate with you, there's no way to change your mind, what is the best indicator that you look at? I see some MACD, I see VWAP, I've had some volume people in here, I see price is good. Henry, I don't know if you're my student or not. Moving averages, I get that. Ichimoto, we got some people that like some difficult stuff. MACD or ATR, Parabot. Here, guys, here's the best indicator that exists. You're the best indicator. What are all those things, right? John is the only one that got it. He said your brain. You're the best indicator because you have the ability to read price. An indicator does not know your risk tolerance. It doesn't know what's going on in the news. It can't do anything. It completely has nothing. It is taking data and it is telling you something after the fact. And it's kind of, and again, one of the biggest problems is they're all lagging, okay? You are the best indicator. You can see what trend is. You can pop between 5 different charts because remember, you're not trading against a machine. You're trading against other people, right? Other people have emotions. Other people see charts. Other people are using those indicators. If two of you, one of you believes it's long and one of you believes it's short, and you both have a MACD indicator, how the heck could one of you be wrong? Remember, at the end of the day, it's your beliefs, your strategy, your time in front of the charts, your reading of price that's going to make you a winner or a loser. So you are the best indicator. Remember, these things are just tools. A shoe is a tool, but we don't need it to walk. We don't need it to run. Your brain, your eyes, your chart time is the best indicator. Now, here's the biggest secret, guys. I don't want to go over. I'm going to go over about 2 minutes here because, Todd did my intro and it was a little bit long, right? What is the biggest secret about trading that no one ever tells you? You guys ready for this? Hopefully you guys have a pen and paper and you guys are writing this down, okay? And again, hopefully this kind of brings everything together and leads you right into what Todd is going to talk about in about 15 minutes, okay? Here it is. Ready? Whew. What chart is this? Type it in chat. Tell me what chart this is. Come on, type it in. All right, guys, ready? Number 2. What chart is this? Think hard. This was this week. You guys should know this was this week. What chart is this? Not what chart type. What is the asset? What is the asset? What is this? Is it gold? Is it oil? Is it the NQ? Is it the S&P? What is it? Okay, number 3. What is this a chart of? This was also done this week. This was actually done on Monday. No, sorry. This one was done on Friday. I can tell my students. All right, you guys ready? Here's the secret. S&P 500. Okay, did you guys get that? It was the S&P 500 30-minute chart. Second one was the Euro Dollar Forex chart, 30-minute chart. Last one, and again, let's see if anybody's a ringer. Last one, Amazon 5-minute chart. So you may be saying, what the heck is the secret? Here's the secret. A chart is a chart is a chart. Good technical analysis and strategies should work on whatever chart that you are looking at. A chart is nothing more, as I've mentioned many times, if you're recording of price. And as a trader, it's your goal is to profit from those buyers and sellers. It doesn't matter that this is Amazon. You should be able to read this and apply your technical analysis to it, because this These candles are no different than this, are no different than this. Okay? There is no difference between the two, or actually these three. Every single chart tells you the same exact thing. So if you are a true chart technician, you should be able to, without a doubt, look at a chart and say, it doesn't matter what this is. I could cover the symbol and tell you there are most likely buyers here, or most likely buyers or sellers here. If price got to that level, I'd be interested in taking a short. And you know what? This is a great pair for a binary, or this is a great pair for a knockout, or even maybe potentially this is a great one for a call spread. At the end of the day, guys, a chart is a chart is a chart. Understand the fundamentals, understand what the chart is trying to show you. Don't have a preconceived bias. And if you use an indicator, use it as a confirmation for what you are seeing in a chart, not what you are feeling. All right? So with that said, I really appreciate you guys attending today. There's a bunch of questions back and forth. If you have anything further or wanted to ask me, something specific about an indicator you're using, you guys are more than welcome to message me, support@keeptradingsimple.com. You guys can always attend the Tuesday afternoon at 12 p.m. sessions. I break down charts and I'll show you what I use. Also, I'm going to be doing one of the advanced concepts tomorrow. It's something that is, it's brand new that I talk about it with my students, but I've never released it externally. From 1 to 145, mastering average true range. It is an indicator, but what I do is I use it to select higher probability Nadex strikes. The biggest question I get is, how do I pick the right strikes in Nadex? I'm going to show you guys tomorrow, so if you guys are able to attend that one. So with that being said, I will turn it back over to Todd. And once again, I really appreciate you, everybody that was on today. You guys were great inside of the session. I got one, John. Yeah, John, a couple of you got them, but again, nobody got Amazon. All right. So I will see you guys tomorrow. Again, make sure you guys give Todd a hard time. Ask him what chart he's looking at, why he likes Japanese candlesticks, and what his favorite indicators are, and match those things up the right way. All right.
Hey, Brian, thank you so much for that. I really appreciate it. Now, I'm gonna temper what Brian was saying a little bit. The last session of the day is really going to be a summary of what we've done today. I really want to keep it to the basics, and I'm going to demonstrate. Well, this is the cooking. This is the cooking show. While we've given you some recipes, we're going to get into the kitchen, and we're going to look at knockouts on the platform. We're going to look at binaries on the platform. We are going to get into the charts and just look at what's available. Remember, today is about the basics. Tomorrow we'll get into a little bit more advanced concepts as we talk about, Brian mentioned a bunch of different technical indicators. We're going to draw them on some charts tomorrow. I'm going to pick out a handful of them, and we're going to actually put them on and try to explain what it is that these indicators are trying to indicate, and whether and in different time frames as well. So we'll get more into that tomorrow morning. With that, I do want to, I want us to be able to take a break.